You got it.
Hello, everyone. Welcome to the Golden Hour. It's April 13th, 2020. Today's topic is why does digital currency even matter, with Brett, who is a corporate attorney and blockchain expert. I'm so happy to see everyone today. We're going to have a quick, sweet, and to the point presentation from Brett. And with that being said, I will pass it over to you, Brett. Thanks for coming today.
Thanks, Lainey. Thanks for having me. I'm going to share my screen. Give me 1 second. All right, and I'm just gonna, can everybody see my screen okay? Perfect. All right, so today we're talking, what is blockchain? What is cryptocurrency? Why does it matter? And how might it apply in your business, whether that's directly or indirectly with your customers, your partners, maybe for the future or the long term. My role, just very quickly, I lead our digital currency and blockchain practice group as a corporate attorney at Structural Law Group in San Jose. I work with a lot of companies who are really on the frontier in terms of this industry and figuring out, well, how can we best use this technology to make a difference with a real problem? Like, why do we even need it? On one hand, I have potential clients who would come and say, we have a token for a restaurant. Well, restaurants are doing okay, I think, as far as I know, in terms of making food. But there are other businesses where they're like, there is a real need. So we're going to go through in terms of why does this technology matter? What are some real world use cases and some examples? And then what are some of the challenges that are present and will be there for probably the foreseeable future as these things start to continue to go in motion? So first question I have, just for anybody, in terms of cryptocurrency, blockchain, does anybody invest in any cryptocurrencies? You can raise your hand or just say yes.
I want to, but no, I haven't.
Okay, does anybody use any products that incorporate blockchain, digital currency, anything like that?
I have clients that do.
Okay, so we've got some clients. So it's good to know. I mean, we're at the beginning, so I'm going to try and tackle this as high level. Try not to go too deep, really, so you can issue spot and figure out where this kind of can go. But if you have any specific questions, please ask. So I'd like to just start with the definition of both blockchain and cryptocurrency. It's on the slide, but I'm just going to read a couple of the key points of it. So these are characteristics, really. It's why all this technology is scalable. So blockchain is a shared, immutable ledger that facilitates the process of recording transactions and tracking assets in a business network in real time. So in that definition, shared and immutable are two of the core traits of blockchain, because shared, it's peer-to-peer. So anybody can have access to this, we'll call it a platform for right now. Imagine you have a software platform that you can edit and change. So think of like Amazon, but you actually could change it yourself. Now everybody has access to that platform at the same time, sees the same information, and can do the same types of actions on that platform. So Amazon, you could buy or sell. Imagine on a blockchain network, you do the same. So shared is everybody can see it, everybody has access to it, which is why it makes it more secure than other networks. So if I get hacked, well, 15 other people have access to the same platform. They're not being hacked at the same time. Second big characteristic is immutable. This means that the record cannot be changed. So anytime a transaction or an action occurs within a blockchain called a platform, it is recorded on a digital ledger. So imagine your physical ledgers where you'd write down every transaction, check in, check out, deposit, withdrawal, whatever the case is. In this case, this record is built digitally and everybody has access to it at the same time. So if you start to think about, well, okay, now it can be shared with everybody, it can be public or private, and you can't change, in terms of the data itself, the data is secure and it's in real time. So that was the other part of this. Every time something happens, a new block of data gets added and then it's validated and goes through the process, just very high level. So taking all those kind of core features of shared, immutable, or not able to be changed, and in real time, this can scale across many industries. So we'll get to that in a second. And I just want to go through cryptocurrency as well, which is kind of an offshoot of the blockchain technology. So imagine a platform, and in order to use that platform, there are tokens or digital currency, which is a medium of exchange that is digital encrypted, and decentralized. So I'm sure everybody's heard of Bitcoin at the very least, whether you invested or not. Ethereum's another big one. Now they have different functionality, but it's just as a means of value, i.e. a cryptocurrency, they can be exchanged for a real service. So Bitcoin has become very popular, like in the gaming world, to use as a way to, I want to buy that person's arsenal of outfits for a specific video game. Well, they would use Bitcoin, and then it'd say, here's my Bitcoin, here's, 0.25, whatever. Now I own your arsenal and an attire for my character in that game. So now we come to the real world examples and where this fits in. So I know a couple of mentioned they have clients that are in this industry and using blockchain and maybe cryptocurrencies as well. Claire, do you mind do you know what your client does, just on a high level, what they're doing?
They are selling essentially stories and music for cryptocurrency.
Okay, stories and music. So I think I can relate to that one. So of the use cases and examples, this one to me might fall into entertainment and art. So Taylor Swift is a big example, and I'll get to her in a second, but one of the big reasons that cryptocurrency and blockchain is very valuable when it comes to entertainment and art is the way it can change the industry. So for example, with art itself, often with physical art, you have a painting, you have a sculpture, a statue. It is sometimes to verify who created it and is it authentic is very difficult. Now with cryptocurrency, if you digitize a physical asset, such as a painting, onto the blockchain, you record it, you record who the owners are, their wallet address. Now that can be used anywhere digitally. So you could have it on a digital photo frame at your house. You could share it on a computer, and you're the original owner, and there's proof of it right there. Now, some people, in terms of real world arts, there's lots of duplicates, which is how people get, spy painting they think is the original, the Mona Lisa, and it's not. So art, that's kind of how it falls into that bucket. Entertainment, like Claire's clients, like Taylor Swift. Imagine so Taylor Swift has some NFTs, which are called non-fungible tokens. I don't want to get too far into it, but it's like a cryptocurrency, except for in this case, the value is whatever we assign to it. But what it can do functionally and in terms of purposes, I could have, let's say I buy Taylor Swift's token for a part of her NFT. That might grant me exclusive access to behind the scenes at one of her concerts. I might get to do a meet and greet with her. I might get first dibs at a ticket purchase. All these things can happen all at once if I have Taylor Swift's token. So to do that is, all in one place is unique. And the fact that it's Taylor Swift or another celebrity that can do this, well, then I can really subscribe to them, and you can almost make it a subscription model where if new features come out, well, hey, it's going to cost 5 Taylor coins in order to get this access to the next tour's tickets. So bottom line is that in terms of authenticity, ownership, and scaling the business, entertainment art is one of those. A couple other big ones that that I see a lot with my clients in terms of being a lawyer and coming into saying, where do I fit in? Well, in terms of legal, technology, and business, the three kind of have to be in sync. And so if one of my clients is in real estate, this is a big use case where clients are trying to democratize access to investment. So for example, imagine you own a couple properties. It's a residential home, it's a office space, it's commercial, and you want to raise money to do improvements. Using blockchain and cryptocurrency, if you don't want to go through the bank, you don't want to go through traditional institutional investors, well, one way is to democratize access and create your own token and basically divide up the ownership of that property and raise money that way. Now, there are definitely limitations, which we'll get into in the obstacles section of which is the next slide, but it allows me to raise that money for the improvements on that building, that home. And then if I'm okay with giving away some ownership of it, then as owners of the tokens, usually the way it works is that I get access to the net profits. So the rent that comes in, anything like that. And using blockchain, you can scale this out where everything happens at once. So if I'm going to raise money for home improvements or office improvements, the money can come in on the blockchain. Then for anyone who needs to get paid, such as the contractors who are going to do the work, I can also make those payments at the same time within that same network, as long as I set the rules up, which gets into some of the challenges of technical development. But it can all happen seamlessly, very efficient, as opposed to breaking it apart into piecemeal pieces as we do in the real world. One of the other ones I want to kind of go into is decentralized finance, or DeFi. Has anybody heard of DeFi, or decentralized finance?
No, never.
So oftentimes it's where those who do not have access or reliability in traditional banking systems. So Africa is a big example. So there are a ton of companies, and if you look on the slide, I put in examples. So Alaya Credit in this case, put some other company names that are examples that are doing, working in this space. But in terms of DeFi, Africa does not have a great banking system. There's a lot of fraud, a lot of instability, and an inability to get access to putting money in a safe spot, getting access to loans to buy a home. If I want to go through my job and try to, take out money, sometimes they will make that ability to happen to take out the loan. So the problem in Africa is that, hey, how do we get access to a reliable financial network? Well, cryptocurrency is a great solution because while it still is a little bit volatile, it's, certainly for Bitcoin, some of the more well-known, well-used, and more stable cryptocurrencies, they can be also converted into more stable currencies like stablecoins, which I know I'm throwing a lot of terms out, but in short, there's a way to take that Bitcoin and make it more stable by transferring into something else called a stable coin. But going back to access for Africa, they can use cryptocurrencies. They don't have to go through a bank. They don't have to deal with any of the issues of onboarding. They don't have to worry about someone screwing over the bank or defrauding it. Somebody from the government, the kind of the fraud that's kind of prevalent in multiple countries throughout the continent of Africa. So DeFi is that solution to say, hey, there are millions of Africans who do not have access to that traditional banking or reliable one. They could literally download a wallet online, get a hardware wallet if they wanted, and then turn their money, their national currency, into cryptocurrency. And now they don't have to rely on a third party. Now, there certainly are pros and cons to that because they have to be functional and at least a little bit fluent to use it, but it gives them the ability to control their environment when it comes to finances, as opposed to kind of being at the whims of, sometimes an unstable and not very accessible environment. So those are some of the use cases and examples. I'm just trying to stay high level, and then that kind of relates to some of the challenges that involve these real world use cases, because we're still early. We're on the frontier. There was real companies doing this. I mean, as you saw on the slide before, Accenture, IBM, big companies have devoted resources. Obviously, Facebook went from Facebook to Meta, and they're really focused on the metaverse, which is a whole nother ball game. But the bottom line, there are definitely challenges. And oftentimes in the news, mainstream media, you're going to hear about the scams and the pump and dump projects where you have a token project where they sell tokens that are supposed to do things, but there's still development that needs to happen on the technological side. So you have to actually build out the platforms with their coders and developers. But then they're really just trying to raise the money and they run. Now that definitely happens, and I don't want to, kind of minimize that fact. But really, that's in every industry, and I don't think it's unique to cryptocurrency or blockchain. It's just something that unfortunately has happened, and we have to kind of educate those to avoid saying, hey, I want to give $10 million in cryptocurrency to this person who's supposed to turn around and make me 50% return. Well, if it sounds too good to be true, be careful with that. And I've helped clients where, as much as we can, where they have got scammed out of millions of dollars of cryptocurrency. And it usually comes through different social media or messaging apps like WeChat, WhatsApp. And, once you get rid of the cryptocurrency, it's gone. And to get it back, you have to have the other end say, okay, yeah, we'll send it back to your wallet fortunately doesn't really happen in the scams, but that happens. That aside, I think the real challenges are about development, adoption, education, and then the role of government. So I'll start with government because I think with my clients, the thing I see the most is they're trying to figure out how do we navigate certain laws that are not meant for blockchain and cryptocurrencies. For example, any securities law, which is kind of enforced by the SEC, and those laws are from the 1930s and 1940s that are relevant to companies who are going to issue their own token that they have to develop, and it's going to take 3 months, 6 months, 12 months, whatever the case is. Unfortunately, that often falls into the realm of the SEC, where they can say, hey, we think this falls into as a security as opposed to a non-security, like a security would be like a stock, a bond, certain types of loans. They'll say, we think this token is a security and we want to regulate it. And the way things are set up right now is there's not really a clear path as to what blockchain companies can do to comply other than spend lots of money and lots of time. So, and then there was a new recently passed bill, the infrastructure bill, which had a lot of things in it, but there was very specific crypto provisions that said basically anybody who is involved in taking cryptocurrency, whether you're a developer, you're a miner who is validating transactions to say, hey, this is legit, you have to do your own due diligence on who is sending you that cryptocurrency. So those are some of the challenges that are here. Now that law is still, it got passed, but there's a lot of lobbying going back and forth as to what the final language will end up being. I encourage people to, read up on that. You certainly can comment on it as it becomes available from various government agencies when they welcome public comments. But the bottom line is that right now it's super difficult to navigate the industry where all my clients are spending a lot of money or they're taking risk or some combination of both. Second, third, fourth challenges on this in terms of adoption and security. So a few of you mentioned that you don't use any cryptocurrency, you don't invest, but it's here. And obviously the flashy stuff is so-and-so invested in Bitcoin when it was like $500. Now it's 40, 50,000. Not everybody did that. I invest in cryptocurrency, but I didn't invest that early. That's kind of the sexy stuff. But the stuff that I think is here to stay and what we need to do is learn how to adopt it and feel secure about it. So for example, I mentioned digital wallets and hardware wallets. There are actual wallets that will hold your cryptocurrency. MetaMask is an example of a digital wallet. Trezor, Ledger are forms of hardware wallets where you actually can put your cryptocurrency in an offline wallet as if it's in your pockets, like you do with your wallets, whether it's in your purse, it's in your back pocket. You can do the same thing with cryptocurrency. It's just learning how to use it there's a bit of a learning curve, I think. I'm still learning that myself, but it's something I'm trying to, by the end of the year, be comfortable doing. But bottom line is that for people to feel comfortable using cryptocurrency, whether it's the millennials, it's the, my parents' generation, whatever the case is, everybody has a different, learning curve. And to get it to be fully adopted, we have to educate ourselves, learn how to use it. So that means, okay, well, maybe I try a small scale version of this and say, rather than transferring, say I had a whole Bitcoin, which is obviously worth a lot of money, rather than transferring that whole Bitcoin, why not buy a very low price token and try a practice transfer where if you screw it up, it's like a penny as opposed to $50,000. I think there are ways to try and practice this, but there is some trial and error. And hopefully as companies get more mature in the space, they're able to say, here's what you need to do. But in the meantime, and even then, you have to be self-educated because no one's going to do it for you.
Question.
Do you have a question? Yeah.
Do you think it's a possibility that at some point a financial advisor would be they'd have an expertise or department that's an expert in the digital wallet aspect to manage someone's portfolio?
Yeah, absolutely. So the great question, and that is definitely coming, and especially as more of the exchange traded funds, the mutual funds involving cryptocurrencies get approved. So far, I think only there's been a Bitcoin ETF that's been approved. Any of the Ethereum ones have been basically, as he said no, or it's declined to comment. But as those become more prevalent, financial advisors, as part of their portfolios, are already advising clients on, hey, you should maybe 5% of it buy some cryptocurrency. So in order to, properly say, hey, clients, you should do this, well, they're going to have to be transversant in that. So it's already happening, and as more publicly available means of investment happens, like the ETFs, then I think financial advisors will continue to progress and mature in terms of how they understand how to manage your wallets, whether it's MetaMask online, which I think is easier than the hardware wallets, but the hardware wallet's safer because it's offline, as opposed to MetaMask, where you're actually going through, basically imagine software like your traditional, any kind of app that anybody uses on the App Store. It can be integrated with blockchain through an API, which is basically, in short, it is a gateway between the two to communicate. So between the two of them, yes, the short answer is yes. Financial advisors will definitely do that. I think they're already starting to do that as more people want to be invested into cryptocurrency. And then that's going to just kind of sprinkle further and further where, for example, our firm, we've had clients that have asked to pay in cryptocurrency. We haven't accepted yet just because it's one-off, it's very small, and it's a lot of onboarding to do it. But I think eventually at some point we might accept it. And I know there are some firms that do accept cryptocurrency, tends to be the bigger firms, and to be more flexible. It's just there are some challenges there with the adoption part of this. So great question, Lainey. And I'm already seeing with some of the financial advisors I talk to. And then the last thing I'll kind of conclude on, related to adoption, government, whatever it is. I mean, some of these projects are very early on. Some are quite mature, where they actually have real functionality. They're on version 3, 4, 5 of their product, which is based on the blockchain technology. It could also be a token or a digital currency. Whatever the case is, there are not millions of blockchain developers. They are, few and far between, I think. But I think as the technology continues to mature, people understand it better, where it fits in, how it can really create efficiencies in so many ways, because you can do so many things all at once. I mean, like for contracts, for example, imagine buying a home, and rather than having to sign, page after page after page for closing documents, meeting with the notary, sending the money to your lender through it to go into escrow, all that could be done in one fell swoop on the same network if you create it so everybody had access. The lenders, the seller, the buyer, the brokers who are involved on both sides, they get paid their commission. Escrow gets sent to the sellers. The rest of the payment plan from the lender goes to the sellers. Purchaser gets access to the title. All that stuff can be in one fell swoop. It's kind of one of the, I think, real estate use cases. It's just going to take time. So patience, being open-minded and challenging yourself to learn some of this, I definitely encourage, because whether it's you, it's your clients, it's your partners, I think this here to stay in some form. We don't know who the winners are all going to be. We certainly have some front runners of Bitcoin and Ethereum because they have real value and real functionality. But time will tell. So that's the biggest stuff with obstacles and challenges. So I'm not, kind of a condensed version of this. But if you have questions, this is my contact information. You can feel free to reach out to me on LinkedIn. And I just reached out, happy to have a conversation. I enjoy having conversations. That's why I invest in the technology. I work with clients in technology, and I'm trying to do things that hopefully can help curb or get rid of some of the issues and the barriers that are currently there for companies, because it's tough. I mean, people just want to do business, and at the same time, they don't want to screw over the common person. So that's all I have for today. I can do like 2 minutes of questions, if anything high level, and then otherwise, please just email me, add me on LinkedIn, and happy to talk with you.
Awesome. Thank you so much for that presentation, Brett. I have a question right off the bat that I'm curious about, just because I've been hearing a lot of concerns about how cryptocurrency impacts clean energy, as well as climate change and whatnot, and the amount of energy that is used to generate cryptocurrency and NFTs. Being said, are there any cryptocurrencies out there that are earth friendly or green? And if so, what's your experience with them? And what are your thoughts on the current situation with energy usage on cryptocurrency?
Yeah, I mean, good question. I mean, I think big picture with the energy use, I think there are some misnomers and, kind of misleading perceptions about how much energy is used, because a lot of times the energy is set up in a way that it's almost can be renewable. and you might hear about, oh, it use this much electricity for these Bitcoin mining companies. Yeah, at first I think there was definitely some inefficiencies, especially since this dates back to like 2007, 2008, 2009. But I think present day generally, it's just you kind of have to sift through some of the junk. But generally, I think it's more energy efficient. I'm not a science nerd in terms of the energy side, but that's just from like my reading of how some of these projects are set up. And then kind of specific on tokens, I mean, it's going to vary project to project. I know some projects are very specific, like you said, on, hey, we're trying to do renewable energy, or they're focused on like global warming, very specific projects. I can't speak to those. But what I encourage is anytime you see a cryptocurrency project, read the white paper. Every project has which is basically like their high level of the business plan. Some are better than others. They can range from, I've seen some as short as 5 pages. I've seen some over 50 pages, but basically gives you an idea of what problems they're solving. It's almost like a pitch deck, what problems they're solving, how they plan to do it, and the ways they're planning to do it, their team. And really that's when they should go into, I like to see white papers that have both, here's the high level business stuff, and here's the technical architecture of where we plan to go. That really helps. And you can see how it fits together. And then you have a kind of a more clear vision of how is this going to affect the energy? How is it going to affect the environment? So that's where I encourage the kind of issue spot. So hopefully that helps answer your question, Chaz.
Thank you, Brett.
Brett, I have a question too. Have you heard of circle.com and USDC? And, I understand it's like 1 for 1 with $1. And, can you kind of share with me what you know about that? And is it any more stable of a cryptocurrency, the USDC, or, just anything that
Yeah, absolutely. So good question. So USDC is one of the stable coins. Others that are well known are Tether. And the intent is that they are backed up so that it's $1 USD to one stable coin, in this case, USDC. Circle is one of the larger companies. I think they recently just raised a couple $100 million in the last month, I think, even sooner than that. One of my clients actually works with them where they have an underlying real estate portfolio. They've created their own token that acts like a bond, and it's backed by Circle. So the intent is if the value of that client's or another client's token starts to crash for some reason, well, it's still backed by that stable coin. So you can convert in the stable coin and you don't have to go through the same fluctuations like as Bitcoin does. I mean, Bitcoin has ranged anywhere from, I think, high 60,000 all the way down to 30,000 over the past couple of 6 to 9 months. So stable coins are trying to help curb the issue of, hey, if you have a volatile cryptocurrency like Bitcoin, like Ethereum, Solana, whatever, you can convert it into a stable coin, which can be tax consequences. Check with your CPAs. But it really gives you some more assurance so that if there is volatility, stable coins tend to stay around $1 in terms of value. Sometimes they dip a little below and sometimes a little bit above. And I think the intent of Circle is to help stabilize the market for some of these players who are doing, more, the projects are early on, there's more speculative, and sometimes it takes time for that to kind of steady out on the financial side. So that's the way I've seen it used, where it really can kind of back up a cryptocurrency so that in order, Stellar, I know, is a big one as well. I'd encourage you to check out them. They have quite a complex structure, but they've done a similar thing to Circle. So bottom line, stable coins are definitely less volatile than your traditional cryptocurrency. It's just, you've got to make sure they're backed, because Tether, for example, has had some issues where the way they said their stable coin Tether was backed by the USD was not exactly aligning with that 1-to-1, and then they got hacked and there were some issues there. So definitely, whether it's Circle or it's another one of the bigger players that are stable coins, read about how they're doing it, because the devil in the details really matters there, to really feel like, does this really stabilize what's going on, or am I just at risk with another token because the way they've set it up is not really backed 1-to-1. Hopefully that helps clear with kind of some of the issues and things to look out for when you're looking at Circle and other stable coins.
Yeah, that's great. Thank you.
All right, Lainey, I've got nothing else. So if anybody else has any questions, feel free to reach out, and thanks for having me.
Yeah, thank you so much.